Good morning, everyone. Welcome to the July 7th, Tuesday edition of Market Opening Bell, your 10-minute guide to the stock market. The Hang Seng Index opened 54 points higher on Monday and then traded higher with fluctuations throughout the day, closing at 23,616 points, up 266 points or 1.1%. Market turnover reached 314.7 billion Hong Kong dollars. The X-share index closed at 7,812 points, up 112 points or 1.5%. The Hang Seng Tech Index closed at 4,541 points, up 42 points or 0.9%. Southbound funds net bought $20.528 billion worth of Hong Kong stocks. Among them, net purchases included Tracker Fund at $6.868 billion, Tencent at $2.493 billion, Hang Seng China Enterprises Index ETF at 963 million, Alibaba at 753 million, Zhipu at 681 million, Hua Hong Semiconductor at 282 million, and Giga Device at 104 million. Net sales included Yangtze Optical Fibre and Cable at 1.088 billion, Kingboard Laminates at 1.068 billion, Kingboard Holdings at 853 million, and SMIC at 817 million. According to statistics, Southbound funds have net sold SMIC for 3 consecutive days, totaling 2.225 billion. Technically, the Hang Seng Index has successfully stabilized above both the 5-day moving average around 23,185 points and the 10-day moving average around 23,219 points. It has also formed a series of higher highs and higher lows over recent days. The short-term technical structure has shifted from weak to strong and is currently pushing upward toward the resistance level at the 20-day moving average around 23,866 points. The 3 major A-share indexes opened 0.4% to 0.8% higher, then showed mixed performance and all turned lower in late trading, closing down between 0.1% and 1.8%. The Shanghai Composite Index fell 2 points to close at 4,041 points. The Shenzhen Component Index dropped 180 points or 1.2% to 15,416 points. The Chinex Index declined 71 points or 1.8% to 3,948 points. Total turnover in Shanghai and Shenzhen markets combined reached 3.09 trillion yuan. Mainland storage leader Longsci Electronics is expected to see its midterm net profit surge by as much as 744 times year-on-year. Its share price rose 10.3%, driving gains in other storage chip stocks. China Electronics Port hit the daily limit up, while Empyrean Technology also climbed 14.1%. The renminbi central parity rate against the US dollar was set at 6.8066, down 19 pips from the previous day. Hong Kong listed innovative drug concept stocks collectively strengthened again. On the news front, the Comprehensive Department of the National Medical Products Administration has publicly solicited opinions on the announcement on optimizing matters related to the review and approval of cell and gene therapy products draft for comments. The document supports clinically value-oriented R&D and innovation in cell and gene therapies, including the inclusion of qualifying cell and gene therapy products into the 30-day fast-track review channel for innovative drug clinical trials. The policy aims to optimize the approval process for cell and gene therapy products, fully accelerate clinically value-oriented, innovative R&D, align China's review efficiency with the world's highest standards, promote the commercialization of cell therapies in China, reduce corporate time costs, and drive drug globalization, as well as growth in the CDMO sector. In the second half of 2026, the fundamentals of China's innovative drug industry are expected to improve steadily, primarily driven by higher R&D quality, global value validation, and improved profitability. Looking ahead to the second half and beyond, major international conferences such as WCLC, ESMO, ACR, and ASH will be held successively. Multiple registrational studies will enter data readout windows. Global Phase 3 registrational trials will continue to advance, and overseas commercialization will gradually materialize, all of which are expected to jointly drive performance in the innovative drug sector. WCLC, ESMO, ACR, and ASH are the world's foremost authoritative top academic annual conference in medicine. In the biopharmaceutical field, these meetings are often called philosopher's stones because pharmaceutical companies release the latest clinical trial data for their core pipeline drugs at these events. The quality of the data can directly cause a listed pharmaceutical company's market capitalization to surge or to be halved, and they also serve as incubators for multinational corporations seeking cross-border licensing deals for new drugs. Hong Kong-listed mobile game stocks collectively surged. On the news front, the National Press and Publication Administration issued 483 game licenses in the second quarter, representing a 13% year-on-year increase. This marks the domestic gaming industry officially entering a dual-track driving period of normalized regulation and abundant product supply. With stable and predictable license issuance, whether a license can be obtained is no longer the fatal pain point determining a game developer's profitability. Instead, the focus has shifted to competition in product quality and operational efficiency. This benefits leading companies with deep R&D foundations, allowing them to launch new titles on schedule. The single quarter issuance of 483 licenses signals a dense wave of new game launches from the second half of this year through 2027, taking Tencent's Astro Heatwave approved in June and NetEase Shadow Stealth approved in May as examples. Major players are concentrating heavy resources on hardcore subgenres such as extraction shooter games. It's expected that user acquisition costs and user competition in this field will become extremely intense over the next 12 months. Statistics show that although a total of 950 licenses were issued in the first half of 2026 and actual market sales revenue grew modestly, the Asia Online Gaming Concept Index still fell about 14% against the trend in the first half. As industry fundamentals show a clear recovery, gaming stocks, especially industry giants, have room for revaluation. Kuaishou was the best performing blue chip stock, closing at $46, up 8%. On the news front, Kuaishou's video generation large model Kling recently secured nearly $3 billion in financing, with the post-money valuation potentially reaching $18 billion. This round sets a record for the largest single round financing by a global multi-model large model company. If the Kling valuation from this transaction is deducted from Kuaishou's $23.5 billion market cap, the core business implies a 2-to-6 PE ratio of approximately 3 times. Even after applying a 30% holding company discount to Kuaishou's stake in Kling, the core business still implies only a 4.3 times 2-to-6 PE. Separately, Kuaishou announced that it has been informed by Tencent, It has been informed Tencent sold a total of 272.9 million Class B shares via off-exchange bulk trading on July 6. After the sale, Tencent's stake will decrease from approximately 15.68% to 9.37%, and it will no longer be a substantial shareholder. Tencent stated that it remains confident in the group's long-term development prospects and that both parties will continue to maintain a win-win relationship, including ongoing strategic cooperation. Hong Kong-listed power equipment stocks rose sharply. On the news front, the explosion in AI computing power demand combined with accelerated global power grid upgrades is driving the power equipment industry into a new prosperity cycle. The latest report from the International Energy Agency projects that global electricity supply and infrastructure investment will approach $1.6 trillion by 2026, with grid investment expected to reach nearly $550 billion, a nearly 20% year-on-year increase. The AI era is elevating energy security to one of the most important capital expenditure themes globally over the next decade. Asia is entering a super cycle of energy investment exceeding $5.5 trillion. The North American market is facing severe power shortages due to AI data center expansion. Against this backdrop, Chinese power equipment companies are encountering major opportunities for overseas substitution, with data centers leading the acceleration of global power growth. Domestic power supply equipment and energy storage companies are well positioned to benefit thanks to the industrial chain layouts. Yangtze Optical Fibre and Cable fell 14.8%, breaking below 200 Hong Kong dollars. The main reasons were a triple blow: Nvidia's new chip manufacturing rumors heavily weighing on AI chain sentiment, concerns over the commodity cycle, and profit-taking after earlier sharp gains. The industry's most authoritative research firm, SemiAnalysis, released a report stating that Nvidia's next-generation flagship AI supercomputer and flagship chip Rubin Ultra have encountered physical limits in manufacturing, facing delays of more than 1 year and performance reductions. This black swan event has shattered market expectations for continued strong growth in AI infrastructure, triggering indiscriminate panic selling across AI servers, optical modules, PCBs, and underlying optical fiber segments. Additionally, according to the latest Silicon Data Index, global user spending on AI tokens has fallen nearly 20% from the May high. Investors are worried that explosive AI growth may not be sustainable, which weakens the long-term pricing power of new materials such as optical fiber. Recently, due to surging spot prices for optical fiber, companies like Hans Laser Technology, committing 2.5 billion yuan to cross into the sector, Dalian Thermal Power, and Hoshine Silicon have announced plans to build optical fiber and preform production capacity. The market fears that as a typical cyclical product, optical fiber may re-enter the familiar cycle of capital expansion, then oversupply, then price wars within the next 1 to 2 years. Yangtze Optical Fibre's share price has surged several times in just a few months, once hitting a historical high of $304.66, accumulating massive profit-taking pressure. Technically, stock has fallen about 25% from its historical high, entering a technical bear market, and has also broken below the 100-day moving average at $234. The next support level is seen at $138 to $140. For newly listed stock today, Tong Ren Tang Healthcare, stock code 2667, traded at $4.67 in the grey market on Philip Mart yesterday, which is 15.1% or $0.83 below the listing price. Excluding transaction fees, each lot of 500 shares would result in a paper loss of $415. U.S. stocks closed higher on Monday. The Dow Jones Industrial Average hit the fresh record high, while the Nasdaq rebounded after 2 consecutive down days. The Dow rose 0.3% to close at 53,055 points, extending its record-setting momentum from last week and closing above the 53,000 level for the first time. The Nasdaq climbed 1.1% to 26,121 points. The S&P 500 gained 0.7% to 7,537 points. The fear gauge fixed index fell 0.24 points or 1.5% to 15.57 points. The Nasdaq China Golden Dragon Index, which checks Chinese stocks listed in the U.S., rose 101 points or 1.7% to close at 6,013 points. Sector-wise, communication services stocks led the gains. Technology stocks also advanced, while healthcare stocks saw the largest declines. On individual stocks, AMD surged 6.6%, ranking among the top performers in the S&P 500 after Goldman Sachs raised its price target from $450 to $640. Its competitor, Qualcomm, rose 5.8%, also among the notable gainers in the S&P 500. Nvidia edged up 0.4%. Broadcom will develop custom microchips for Apple products under an expanded cooperation agreement extended to 2031. Broadcom rose 3.7%, while Apple gained 1.3%. Cisco Systems advanced 1.5%, making it one of the best performers in the Dow. IBM climbed 3.5%, the second largest gainer in the Dow, supported by continued growth in its software business and initial integration benefits from the recent acquisition of Confluent. The company expects solid second quarter results and will slightly raise its full-year guidance. U.S. services activity continued to expand in June, though the pace of growth diverged between two key surveys. The ISM data showed a slowdown in growth, while S&P Global indicated an acceleration. The ISM services PMI fell from 54.5 in May to 54 in June, matching expectations. S&P Global's services PMI rose from 50.7 in the prior month to a 4-month high of 51.2 in June, with order demand boosted by new project wins and the FIFA World Cup. According to the CME Fed Watch tool, the probability of the Federal Reserve keeping its benchmark rate unchanged at the end of this month has declined from nearly 82% last Thursday to 75% on Monday. The probability of a 25 basis point rate hike has increased from 18% to 25%. Our stock pick today is Henlius. Stock code 2696. Henlius is primarily engaged in biopharmaceutical business, focusing on the development of biosimilars and innovative biologics for the treatment of tumors and autoimmune diseases. As of March 19th, 2026, the group has successfully obtained approvals for 10 products covering 40 indications in countries and regions including China, the United States, Europe, Canada, Australia, Indonesia, Mexico, and Bolivia. Among them, 7 products have been approved in various overseas markets covering approximately 60 countries and regions and have benefited more than 1 million patients worldwide. The group has achieved remarkable results in its ongoing global strategy. In February 2025, Hanxi Zhuang, in combination with chemotherapy, was approved in the EU for the first-line treatment of adult patients with extensive stage small cell lung cancer. This marked the second product from the group to receive EU approval and fully demonstrated the strong recognition of its innovative products by major international markets. In August and September 2025, HLX14 received approvals from the US FDA and the European Commission, respectively, with approved indications covering all those already approved for the reference product in the respective markets. In November 2025, HLX11 was approved in the United States for neoadjuvant treatment and treatment of metastatic HER2 positive breast cancer, becoming the first and only pertuzumab biosimilar in the US in January 2026. The biologics license application for Hanbeitai was accepted by the US FDA, further validating the group's outstanding capabilities in international registration and quality management. As a strong guarantee for high-quality global product supply, the group's biopharmaceutical industrialization bases provide comprehensive supply to markets in China, the United States, Europe, Latin America, Southeast Asia, and India. In June 2025, the HLX11 and HLX14 production lines at the group's Songjiang Base 1, Phase 1 and Songjiang Base Phase 2 successfully passed EU GMP certification. These production lines had also passed the US FDA's pre-approval GMP inspections for HLX11 and HLX14. The group is comprehensively advancing the development of its pipeline products both domestically and internationally. As of December 31st, 2025, it had obtained approvals for 27 investigational new drug IND applications and 28 new drug application NDA approvals, covering approximately 66 countries and regions, including China, the United States, Europe, and Japan. At the same time, the group's self-established clinical operations teams in China, the United States, Australia, and other locations are systematically advancing clinical studies in nearly 30 countries and regions. Management noted in January this year that the company aims to launch more than 20 products globally by 2030, with over 15 products approved in the US and European markets. The company is also accelerating its transition from the strategic licensing to overseas partners for distribution model to the multinational pharmaceutical company 2.0 phase of establishing its own overseas direct commercialization team. Investment recommendations suggested buying price $67.50, target price $75, stop loss at $63.50. I do not hold the above stock.